Hi everyone, excited to introduce Vikas Arora, an expert in financial analysis. As we navigate the markets together, he'll be sharing his insights, strategies, and experiences along the way. So, Vikas, how would you assess the current state of the stock market? Are we in a bull or bear market, and why?
Hello, everyone. Good to be back within a week to give you an assessment of where the markets are headed. So, from the last week's conversation that we had in the podcast, the stock markets, especially the S&P 500, has created a new high now. It is hit an all-time high. The Dow Jones is about 100 points shy from its all-time high, and the Nasdaq is about 350 points away from its all-time high. So it's very easy to reply back to Nitya and say that we are in a bull market, in a secular bull market, I would say. What does a secular bull market mean? That means that we are going to be here for a longer term, and we'll see some growth in the market. Now there may be some small pullbacks, but we should see a good bull market for the next 3 to 5 years. That's what my prediction is.
So, what are some effective strategies for individual investors looking to navigate volatile markets?
So some specific strategies I would say is, especially we would want to concentrate a little bit more on the Magnificent Seven, the technology stocks, as well as I feel with the other growth sector we will see will be on the oil sector specifically. So not naming any names, in oil you could go into the drillers as well as you could go into the integrated oils. For those are the two specific sectors that I would be focusing on.
So, which sectors do you believe are poised for growth in the next year and why?
So it's kind of again, I think the technology sector, specifically AI related sector, where you would see companies like Nvidia and Dell, naming a few here. But so that would be part of the magnificent. Those are not part of the Magnificent Seven, but they are more on the general sector of artificial intelligence. And there'll be a lot of companies which will benefit, which would be part of the sidekick, if you will, of artificial intelligence. There could be HVAC companies, which would be providing for data centers. Some companies like Veritiv, or a company like NRG. So these are some of the companies that would be beneficial on the artificial intelligence side. Another couple other companies. One would be, say, Best Buy. A Best Buy would be a great company because there is going to be a cycle from a upgrade of laptops. That cycle will require a lot of people to change the laptops, and Best Buy is poised for a good growth on the retail side. On the other company I would say is HP. When they have to upgrade, they are bringing in artificial intelligence in the laptops. So that would be a sector that will also benefit from that standpoint, from a consumer standpoint. So those are again the companies. It's not only the Nvidias or the Metas or the and again the other one would be Apple. Apple is supposed to have their super cycle right now, which is getting delayed because of the new iPhone launch. They are going to be adding that in the Pro 16 Pro and 16 Pro Max. Uh, that when they add the new software, that Apple Intelligence, that will require a lot of people to upgrade their phones. I think it's going to be only 15 and the 16 which will be eligible to get that artificial intelligence. So the super cycle, which is a little bit delayed by 6 months, we will see a lot of good growth, I think, on the Apple side.
So, how do macroeconomic factors like inflation, interest rates, and geopolitical tensions influence stock market performance?
They influence the market almost on a daily basis, on a monthly basis, and even on a quarterly basis. So let me back up. So on a quarterly basis, it's your in earnings. That's what is going to determine the catalyst for the stock markets, which are starting to happen. So the third quarter earnings are going to start coming in. Delta reports tomorrow. Friday we have some banks coming in. So that's going to tell us how the not only what they have done. It's that's the past. The stock market looks 9 months ahead of us. So they want to see what is the strategy of these companies. What are they going to do in the next 9 months that will help them to make the money, and that will fuel the growth in the stock market. So that's the quarterly piece. On a daily basis or on a weekly or a bi-monthly basis, you hear these kind of reports, the labor reports and unemployment reports. These come out weekly, or there may be CPI, PCE reports. Those impact the fluctuations of the market on a daily to weekly basis. Uh, the other macroeconomic sector would be your uh, things like war. The war has been impacting the markets, although the market has kind of not really factored it in as much. But so when there is some kind of a attack or something, or like you have the hurricane coming in, some other anomalies, they are not for some reason making a big significant impact on the markets, which usually they do factor in, but that is becoming more sector specific. So if you look at the insurance companies, they're facing a big uh, impact on their stocks right now, because the amount of money that they will have to shell out to the homeowners and those kind of things, that will impact that. So again, sector specific things will happen. Housing market is taking a different kind of an approach based on the, even though the rates came down initially, but they've gone back up again. So those kind of factors will always impact the markets on a daily as well as a weekly basis based on what comes out of the reports.
Okay. So, what role does global trade play in stock price movements, especially in today's interconnected economy?
Global trade is going to be a big impact. I mean, if we are starting to increase the tariffs on certain companies or certain countries, that could impact the stocks of the country companies here. Europe is starting to enact certain tariffs on certain companies. That will impact the market values of companies. Today, there was a news about Google that the Department of Justice is thinking of breaking them up because of whatever the reasons, the monopolistic reasons that impacted the stock prices. So all these kind of things are interconnected. When the news comes out, whether it's related to a specific industry or a stock, that does impact them. So they are interconnected. Whether they impact them right away or within a month or 2 months, sometimes the market takes some time to digest the news of what it is, and then they make those decisions. So those things are not always on a daily basis. It might be a monthly or a quarterly basis or even a yearly basis, depending on how things move in the departments.
Okay. So, our final question today is why did the Chinese stocks fall down yesterday?
That's a great question. So the Chinese stocks kind of were, it was a very different anomaly. They had not done anything for a long time. And then there were two things which impacted it. Last week we were talking about. One was the rate cuts by China, 50 basis points. And then there was a stimulus package they gave. So just to give you an example, FXI, which is one of the largest Chinese ETF, if you will, which has kind of companies like Alibaba, Baidu, PDD, Pinduoduo, those that stock it used was doing nothing. It was in the early 30s, 31, 32. All of a sudden it went up to 38, and today it has come down back again, back to 32, because they are saying that there is not much stimulus, but there is some more talk happening today that China will do another stimulus. So if that happens, this will fluctuate. So the Chinese, because there's not a lot of transparency, so it's very difficult to know what's going on. And as the news comes out, people make the, sometimes they react first and then they digest it and then they go back. But I think on a pullback, I'm adding to the FXI to get some exposure to the Chinese stocks, not specifically for Alibaba or anything, just at a ETF level to have that exposure.
Thank you so much, Vikas.
Thank you.
I enjoyed today. Hopefully, we'll see you next week.
Thank you so much.